So most people think of student housing as Animal House, kids, getting drunk, destroying property, et cetera, et cetera. And that's really just not what it is. And these properties, I mean, they're set up, they're beautiful, they're better than, sometimes even people's own homes.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Beth Underhill has redeveloped over $5 million in single-family homes. She's also a co-GP on multifamily, student housing, and hotels. Beth, welcome to the show.
Thank you so much for having me. Glad to be here.
Absolutely, Beth. The pleasure is mine. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Certainly. So started in 2018, attended a single family fix and flip workshop, and that led us to developing or redeveloping, I should say, the $5 million of single family homes. Pivoted in 2021 to commercial real estate. Hopped on a ton of Facebook groups, started meeting people, connecting, creating different partnerships. And that has led me to where I am at today with multifamily properties, student housing properties, hotels, and yeah, that's where I'm at today.
That's a lot of movement in a very short period of time. What have been some of the primary driving motivators for the different assets that you've gotten into?
Diversification, number one. Number two, it's really through the strategic partnerships. I've always had an affinity for the hospitality industry. I used to be in it many years ago. So hotels, the opportunity to be able to travel to a variety of different places and see those places. Obviously, if you go visit a multifamily property, great, but why not go visit Panama, Central America, and actually vacation at the same time too? So part of it has been the partnerships. Part of it has just been my affinity for other types of assets, and some of it's just sort of fallen into my lap, and I've just run with it. So
that's awesome. When you look at your portfolio today, which of yours is your favorite and why?
My current favorite is probably the Boulevard, which is in Milledgeville, and it's 126 bed student housing property. It's just an absolutely gorgeous property. Cottage style homes in which the students can live in. And interestingly enough, as we started to acquire this particular asset, I sent my daughter off to college for her freshman year. So I was able to really understand more about the assets themselves and what they can provide for students, either in their and generally speaking, you're not an off-campus student in your first year. However, with some of these colleges and universities having an overload and not enough student housing, you can be a first year student and be off campus. So it was really important to me to make sure that we were buying an asset that was going to provide an environment that and I kept thinking in the back of my mind, okay, if this were my daughter and if this was me as a mom paying for this particular room or whatever you want to call it, would I be okay with it? And absolutely, it's a newer build. The developer was, just like most developers, they don't want to be operating property after they've developed it. So once he developed it, leased it up, held on to it for a few years, and then decided to sell. And that's where we came in and swooped it up.
That's really fascinating. So Milledgeville, I don't know many Milledgevilles, but I'm sure I could find it. Where is Milledgeville?
It's in Georgia.
Georgia. Okay. Very cool. This deal came to you. How did the deal come to you? Like, how did it present itself?
Sure. So I actually am the marketing director for a group, MTN Investment Group. And so through that particular alignment, I was part of the deal. This came to us off market. Luckily, we have on our team someone who he comes from Landmark Properties, which is one of the largest student housing property developers as well as property management companies. So through some of his pipeline resources and so forth, this deal came to us, and that's how we were able to acquire it.
That's really cool. Many people are, I mean, especially, coming on the heels of the pandemic, we're afraid of student housing. It's like, oh, okay, cool. Well, then 3 seconds later, your whole building can be vacant, and then there's going to be, abatements on everything. Abatements probably not the right word, but the income's going to cease. Like, what are some of the risks in student housing? How are you guys overcoming those? And/or, I'll just start there then.
Yeah, absolutely. I think we learned a lot with COVID, right? And what we did learn is that students can still be in these types of environments. Like, for instance, this particular property, it is, the cottage houses are 4, 5, and 6 bedroom. So it's just like living in a house, right? So each student can have their own bedroom, their own bathroom. There's just the common area with the living space, the kitchen, and so forth. And what we learned with COVID is that, these students can survive and thrive, actually, still going to school through Zoom classes, maybe a hybrid type scenario. I know my daughter, she has some online classes still, and she actually attends the University of Kentucky. So she's physically there, but some of her classes are online. Some of them are a hybrid, which is a combination of online and going to the physical, classroom type setting. So I think that, if we were ever to encounter another pandemic like that, we're more prepared to be able to handle this sort of thing. And I don't think we would necessarily see that happening. But a lot of the assets that we are purchasing are set up this way. A lot of the assets in student housing, I should say, are set up this way so that the students themselves have individual rooms. It's almost like a studio apartment, or almost like a 1-bedroom apartment per se. So they can still live there, they can still function, and they can still attend school. So that is one risk that I think has been minimized more so. One of the things that I love about student housing is that, like myself, as soon as my daughter moves off campus, I'm going to be footing the bill for anything off campus, right? It's my credit card that's on file. It's my social security number. It's my credit that's at risk. And that's the beautiful thing about student housing. Most people think of, do you ever remember the movie Animal House?
Yeah, it rings a bell, but I couldn't tell you a thing about it.
Okay, so most people think of student housing as Animal House, kids, getting drunk, destroying property, et cetera, et cetera. And that's really just not what it is. And these properties, I mean, they're set up, they're beautiful, they're better than, sometimes even people's own homes. So from the standpoint of, mom and dad paying for things, right now, the markets that we are purchasing them in, the occupancy is 100%. We have waiting lists on some of our properties. So there's a shortage out there for student housing, and that's what we're finding, and we're taking advantage of it right now, capitalizing on it.
What's the difference between what you guys are providing? I'm thinking about here, like the University of Memphis, they're constantly building student housing, dorms, giant facilities, brand new stuff. How do you compete with that? I don't understand this entirely. So I'm assuming that is university owned versus what you guys have, obviously privately owned. How do you compete with those things that the university they seem to be in the space pretty heavy? So how do you compete with them?
Well, and that's one thing that, as you are going through your due diligence, that's one thing that you do have to research and ensure that the university itself is not going to take away from, the actual property that we're physically buying. But a lot of kids, they want to live off campus. I know sort of the path for my daughter is first year on campus, second year in her sorority, third and fourth year off campus. She already has girlfriends that are living off campus, and they're heading into their sophomore year. And so that's just the general trend. There's only so much housing and land that these universities have, depending on where they're at. So they can only go so far with what they can build. But a lot of them are going through renovations because they're trying to keep up with what's being built off campus.
Right. Absolutely. How does the return profile compare from student housing to, say, I don't know, a Class B multifamily?
Actually, it's pretty competitive. What we're
Okay.
finding right now with some of our deals, we're at right around 18% IRR, about I'm sorry, 8% cash on cash, a 2x equity multiple, and this is with a 5-year hold.
Okay.
So fairly competitive. The one thing I do love about student housing is that, these properties, they're leased up ahead of time, right? Going
Right.
into the school year, most of them, they've already been leased up. They're cash flowing from day one. You have to sign a 12-month lease. So parents are paying for 12 months, regardless of whether or not, the kids are living there for 3 months over the summertime. But a lot of them are, subletting and so forth. So, so they're able to get a little bit of that money back into their pocket. But really, we just, first quarter after taking over this property in Milledgeville, we actually sent out distributions to our investors already. So,
Cool.
and that's not typical of, a value add play.
It's not. You're absolutely right. It's not. Tell me about, I guess once the school year starts, your occupancy is probably doesn't change a whole lot throughout that school year. I mean, it's a
It
little bit.
doesn't unless, a student, something happens to a student, maybe illness, or they drop out of school for whatever reason, something changes, but generally speaking, no. And then we do have a wait list. And unless there's some extenuating circumstances, the parents are still paying for that lease for the entire year.
Right. Oh, that's really, really cool. Yeah, I love the idea of 100% occupied. I think you said is one of the
Mhm.
properties that you got. Are there any concerns on that front? I've heard it said, and we only own a couple multifamily assets, and I'm not the operator on it, so I don't have direct exposure to it. But commonly been said, like, hey, if you're 100% occupied, it means you're probably not priced correctly, in the sense that maybe better be 94% occupied and have a higher rent across the whole portfolio or the whole asset than maybe having 100% occupancy but getting less on the rent side of things. Anything does that strike anything on what you guys are working on right now, or am I just completely off?
No, absolutely. We are going to be pushing rents. We have already started pushing rents. In fact, this property in Murfreesboro that I mentioned, which is near, of course, Middle State Tennessee University. It, the current owner, he was not pushing the rents until we came along and said, hey, look, here's our business plan. This is what we plan to do when we take this asset over. So towards the end of his lease up, he started actually pushing the rents to where we want them to be.
Right.
And he was getting the rents, which was proving to us and him that our business plan is going to work, because people were biting on those rents. And given the fact that we have 63 people right now on a wait list for that particular property, I think we're going to be okay.
Yeah, absolutely. Yeah, that's a strategy I've heard before that I really like, which is to make, and it was a mobile home park operator that came on the show maybe a year ago and talked about that, how they would, in their contracts, all their contracts, they require the current seller to start raising rents ahead of close, and they make him the bad guy. Like, hey, all right, well, they raised rents, and then when they come in, they've already got a even more our property already more stabilized than it was when they went under contract, which is
Right.
which is really, really cool. I love that. Okay, cool. So you see awesome opportunity in student housing. We talked about that. Murfreesboro, you've got a property down in Georgia. And then we haven't really talked about hotels. I know we talked about this slightly there in the intro, where you said you like hotels, you like being able to go where you or vacation, in places that you already own. Tell me about the hotel business and kind of where you see opportunity on that front.
Absolutely. So, obviously COVID presented a fairly significant opportunity for people to come in and kind of swoop in to some of these hotel assets. There were a lot of tired owners, particularly in the Caribbean. And that's where we have been looking quite a bit. And this is with a different partnership than what I was speaking of previously with the student housing properties. But these owners are tired. They weathered the storm. They got through it. And now they're like, okay, it's time for us to retire. It's time for us to move on from these properties. And so that's where people like ourselves come in, and we've been talking to some of these owners and been able to successfully take on some of these properties that are in the Caribbean. So I'm part of a deal that's in Panama, Central America. We have a master lease agreement on that. We're looking to actually end that master lease sooner than 5 years. There was a 5-year master lease. We're looking to end that sooner than 5 years and actually just finance the owners out of it. And be able to take on the property. Sometimes what happens with the master lease is that you still have to, you're still in a partnership, so to speak, with the current owners, and you have to get permission to do certain things. And when you're not necessarily aligned, it makes for a difficult situation. So the sooner we can get them out, the better, right? So that's what's going on there. We have another property in Antigua that we are working to solidify. And this particular property at 75 keys, cash flowing, it's crazy cash flowing. They're running occupancies as high as 80–85%. And they close down 4 months out of the year. So it's nuts, absolutely nuts. And they're one of the few properties that closes 4 months out of the year. Generally speaking, you're going to find in the Caribbean, maybe properties that'll close down like 1 or 2 months, the two most dangerous months, let's just say, when it comes to the hurricane season. But they've chosen to do 4 months because they're actually from Italy, and they like to go back to Italy to take a break from just running the hotel. So the owners, they're a couple, and they're in their 80s. And they're like, you know what, we just want to be done. We want to continue to travel the world, go back to Italy whenever we want to. And so those are, the owners that, we are looking more for. And the beautiful thing about it is that their properties are paid off. So they're more open to seller financing. They understand that, to be able to obtain financing actually in the Caribbean is going to be challenging. So therefore, they're willing to carry the paper. It just might mean that, you have to come to the table with a larger chunk of money than you might want to. However, to be able to, and I'll just, this is an example, on a $5 million property, maybe you come to the table with, 1 million, and they carry the paper for 24 to 36 months, but on a cash flowing asset, you can easily pay that back and kind of have them out of there at least, maybe 2 years. So
wow, that's really cool. What are some of the challenges? I'm thinking both from an international investment standpoint, from staffing internationally, employment. There's just a lot of hurdles to get over. I'm projecting here, but I'm thinking, okay, 75 keys, I think is what you called it.
75 keys. Mm-hmm.
Yeah, 75 keys. So what are some of the challenges you faced operationally on a hotel like that?
Operationally, I would say probably the biggest challenge is just getting supplies, especially if you want to do any kind of renovations. You're relying, down in the Caribbean, they're relying heavily on places like the United States to actually, for material shipments, et cetera. So I think that's more of the challenge. A lot of these operators have very loyal staff that has been in place for a long period of time. They like their jobs. Sometimes these are the only available jobs in and around these areas. So they're going to keep them, right? And if new ownership comes in and treats these individuals exactly like they've been treated all along, the chances of them going anywhere are usually very small relative to what we see up here in the United States. It's not where in the United States, sometimes it's start a job, you're there for 3 weeks, you don't like it, and then you quit. They need those jobs there. And it's, they're such small communities, word can get around that much quicker than it can, up here. So.
Oh, that's very cool. I love that. So you see opportunity in hotels, student housing. What else did we talk about there? There was something else we talked about.
We talked about some multifamily, but I also have an Airbnb. It's an Airbnb arbitrage. So, and this is in Fort Lauderdale. We just came back there. We just came from there, actually, visiting our own Airbnb arbitrage. We wanted to do some things to it, add some add some items to the Airbnb that we thought maybe from an amenity standpoint would be necessary. But it was nice to actually be in our own environment and know that, okay, this is what we're providing to other people. This is great. How can we improve it and so forth? But again, it's in an area that we like to frequent. We like going to Florida. I live in Cincinnati, Ohio. So not a bad option to be able to head down. I mean, it's so funny because, you kind of think to yourself, oh, we don't have to pay for a hotel room. We're paying, this is kind of free, but it's really not free, right? I mean, when we arbitrage something, I mean, we're actually paying to rent the property, and the owner is allowing us to turn around and Airbnb this out. So
that's a pretty unique strategy. I like that strategy, but it seems like you have to find the right owner that doesn't want to Airbnb and or manage and or even hire a third-party management company to do it themselves in order for that to work. How do you go about locating an owner of an Airbnb that is open to the arbitrage strategy?
You talk to a lot of owners, to be honest with you, because not all of them that are renting their properties out are going to be open to that. However, when you look at the Florida market, it's a busy market. And places like Miami were becoming very saturated with Airbnb. If you look at, kind of that southeast, you've got Miami, Fort Lauderdale, up to Boca Raton. Boca doesn't even allow Airbnbs at all. So Fort Lauderdale, falls in the middle. And, when we went down there, let's see, I think it was towards the end of January, we visited numerous locations and talked to plenty of owners, and finally found one that said, you know what? Yeah, I'm totally open to it. But, the contract, of course, is going to make you all reliable or responsible, I should say, for anything that happens to this. And we have, I think we have a very fair contract. He's making money. We're making money. It works out for everybody. So
that's great. I love it. I love all the things that you're investing in. I love the diversification, the commitment to each one for their own unique reasons. That's really, really cool. Certainly appreciate you taking the time to come on the show here today, Beth. It's been a pleasure having you on. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
They can email me, Beth, at lifestyleequitiesgroup.com, or they can follow me on Instagram at Investing with Beth, on TikTok, same handle at Investing with Beth. Or you can text me, 513-470-1078.
Awesome. We'll make sure we include all of that there in the show notes. Beth, thank you again for coming on today. I do appreciate it.
You're welcome. Thank you.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.